Howdy. Welcome back to Dion Talk. I think not only are we in a housing crash currently today, but this crash that we're in today in transactions is worse than the housing crash of 2008. A lot of videos keep coming out on several other channels. And if I'm not lazy in post-production, you're going to see several of those videos, thumbnails right now. I think I was lazy. So what I want to do is I want to talk about two things. One of the main reasons why I think this crash is going to be worse than the last one. And second, who it's going to be worse for. So what I have today is my two friends, Michael Zuber from One Rental at a Time and Matt the Lumberjack Landlord, both who have been investing for over 2 decades, who have large portfolios and in my opinion are extremely successful in this real estate investing world that we're trying to grow in. So what I want you guys to do, and Matt, we'll start with you. If you could tell me, do you agree? Do you think this crash is going to be the same, better, worse than 2008? And who do you think it's going to impact the most?
So I think transactions will be worse. I think transactions will fall more than they did in the previous. I think that price will not fall as far. And I think that it will be more difficult for the move-up buyer. That's the person it's going to be the most difficult for, because they're going to have a great rate on a nice house, and it will be far less expensive to add on to it than it will to go buy something new.
And Mike, you actually did a big pivot just before the last crash.
I did.
Do you think it's going to be better, the same, worse? And who do you think it's going to impact the most?
This is a question I debate all the time because I get a lot of hate on my channel from folks who people want this to be 2008. Why do they want to be 2008? Because there was a 75% crash in real estate prices, at least in my market. Let's say most markets were, many markets were 40%. I got bad news. It's just not. I mean, Fresno, California is not going to crash 75%. I would like nothing better. I wish I could close my eyes and see it again. I just don't. Could there be some markets who have population moves and this and that come down? Sure, but not nationally. So I think there's going to be a lot of people who will be upset, just like they're upset today. How many people thought there was going to be a crash in 2020 and did nothing? You're in big pain right now. You're upside down 25, 30%. Your rate's up 100%. Your payment's up 80%. We've done some math. It's just bad. And some of them are kicking themselves and they just want to, it'll be okay. It'll come back. And my math says it's not going to. The other thing, having gone through the last crash, I think it will be worse. I think transactions are going to go way down. And if you don't know about the real estate game, the real estate industry is something like 8 to 9% of our entire GDP when you add all the components. So it's more than just title companies, inspectors, appraisers, agents. But think about every time you move, right? You got to pay moving. You got to buy new stuff. You got to do paint this, paint that. You got to change this, change that. The real estate industry is broken. The Federal Reserve kept rates too low, too long. As Matt correctly says, the move-up buyer is not going anywhere. I can't tell you how many comments I get from people saying, hey, I bought in 2020. My interest rate's 2.8%. I'd love to move, but I'm going to die in this place. I'm not going anywhere. Matt's already told you the move-up buyer is screwed. I got to tell you, the first-time home buyer is totally screwed. Right? First-time home buyer needs FHA, 3.5%, 5% down. We have an affordability crisis like I've never seen before. Affordability is crashing. And oh, by the way, when the move-up buyer doesn't buy that next house, it also means they don't sell. What does the first-time home buyer need? They need those sellers. We want that 1950s ranch that you bought 5 years ago and you're going to move up because you got promoted or you got married or you had a fourth kid or whatever the answer is. It's not going to happen. There's no homes there. And oh, by the way, now you have Wall Street coming in and getting risk-adjusted return at 6%, and you have iBuyers and you have one rental at a time investors, and they're just not there. You can't build anything. Dude, the first-time home buyer has never been more screwed than right now. There's just And the only part of the market that's still hot is the low end, right? You talk to any agent. I talk to 3 agents a week. They all tell me about how the market has just stopped or slowed down or 80% price drops. But they always close with, if you're below the median, houses sell. So, man, the first-time home buyer, ooh, yeah. So that's kind of where I'm at. I don't know if I missed anything.
That's where your guys' wisdom comes in. You see it coming. You see the changes. We've had several videos where this is how we've adjusted our investing strategy. Image here, if I'm not lazy in post. Here's my 2 things that I think are different now that are actually going to make this crash worse. In 2008, we didn't have, to the extent that we do now, YouTube University. We didn't have the average person having access to a ton of channels who say things like in 2020, there's a massive crash or correction coming. Don't take any action and miss out on 2 years of the best appreciation we've seen. Massive rent increases, all of the benefits that we've had for these last 2 years. People saying, don't take action. So now we have people that are watching channels that say things like, this is how you invest. This is how easy it is. This is how to get into syndications that are projecting rent increases for the next 5 years, because we've seen it for the last 5 years. We're seeing channels like BiggerPockets. I'm 25 years old. I flipped 200 houses last year. Here's how easy it was to do it. Taking out the element of how much time it takes, how much self-education it takes, how strategizing your investing portfolio can make this a safer investment vehicle. Then you couple that with, and this is really impacting commercial more than it is residential. So I think the housing crash is going to hit commercial much more than residential, even though move-up buyer is gone. Buyers have pulled back. Sellers are now getting the fear of missing out. I think for the last 3 to 8 years, as prices kept increasing, people took on debt structure that is not healthy. And we are now seeing in the next 2 to 3 years, loan reevaluation periods come, refinance, balloon payments, things where people were counting on rates being the same or lower and values being the same or higher. And they're not going to see either of those. And that's where the real pain is going to come. And so that's actually something that, Mike, that you've seen and taken advantage of before it happens by pivoting one investment type to another. Can you talk really quick how you did that in like 2007, 8?
Yeah. So again, a lot of people think about the real estate market, they treat all assets the same. And that's a gigantic mistake. Even in a market so small as Fresno, California, houses and fourplexes don't operate the same as larger multifamily. They're different sine waves. And if you pay attention, you can dance through raindrops. And when houses are high, you 1031 out of those and you buy multifamily. And you're absolutely right. I mean, my Thursday guest is Jonathan Twomley, and we talked this morning. Multifamily is already showing cracks. And you add on top of that the cocaine and Red Bull fueled stupidity of the last 2 years with bridge debt, IO debt, short-term value add periods. There's a lot of LPs that have lost money and they don't know it yet. You're not going to get paid back. You're not going to get your returns. And I'm going to sit back and I'm going to be picking up assets. Jonathan and I both think by late 2023, the debt has to mature. There's going to be a lot of loan valuations and sellers will be sold to sell at a discount, which won't hurt the syndicator. It'll hurt all the equity, and the equity is the lender, the private investor. So I will be picking up a bunch of cheap stuff because I have a bunch of houses. I'll 1031 into another peak and I'll buy some stress. It's how I survived last time. We sold 8 and bought 80. It was amazing. And I look forward to doing it again.
One of the things I think that people can actually add to their investing strategy currently is loan products like the ones that Convoy Home Mortgage offer. For the past decades, in order to buy a 5-unit, 6-unit, 7-unit, 8-unit, you needed a commercial loan. Well, they have the DSCR loan with 30 or 40-year fixed rate debt for up to 8 units. So normally myself, it's been 4 units or less because I want the fixed rate debt. Well, now I can start looking at the properties that are going to feel the pain of this housing crash up to 8 units and take over their loan product that had the balloon payment, that had the loan reevaluation period, that had the adjustable rate. And I can purchase it with fixed rate debt, or you could purchase it with fixed rate debt. Matt, any final thoughts? And if somebody wants to reach out with questions, how can they get a hold of you?
So yeah, final thoughts are 3 horrible things that I think will happen in this market. 40-year mortgage will become a mainstay. Number 1, and it's already starting. And number 2 is going to be that I believe that the adjustable rate mortgage is going to be double digits within the next 12 months in the market.
Mean percentage wise?
Yep. I think it's going to be more than 10% of the market in the next 12 months. Yep. And number 3 is I think that they are going to find a way to utilize the same type of loan that they created for the veterans of our country. I think they're going to find a way to do 0% down loans for a certain sector of our population. That's what I think those are all horrifically awful things. And in 3 years, they'll be excellent for us. That's what I think will happen. And Lumberjack Landlord on YouTube.
I think some of those loan products exist now, especially when we have California talking about here's a 10% down payment, forgivable loan if you stay there for 5 years, allowing you to pay more.
Yes.
The prices continue to go up.
Right. So it'll be that. I think it will be more national. There's little pockets of it now, but people are really going to grab a hold of that stuff. It's going to be double digit, adjustables. It's going to be 40-year adjustable rate mortgage for the first X number of years. And you'll be able to either get a 0% down, non-DSCR, or there'll be some sort of down payment assistance that will enable that. And do the math real quickly. A massive boost is going to be what gets decided on student loan debt. That's going to be massive. And that's super inflationary. Film at 11.
Film at 11. And Mike, final thoughts. And if somebody has questions, how can they find you?
Yeah. So my final thoughts are, is everybody wants this to be a repeat of 2008 and the carnage. I would like nothing better. Again, saying, if I could speak my book, crash, crash, crash. However, I think the people that are prepared and doing the work will realize that the crash and transaction we're about to see will actually be better. You'll be able to do more creative financing. In order to do a creative deal, you can't do a creative deal with a bank. I've tried. They don't do those. But you can do a creative bank with a seller. They will do a 50-40-10. They will do they will do complete seller financing. You need the sellers in a position to do this. So again, for the people that are doing the work, this crash will be worse than 08. A lot of people are going to be disappointed because they're expecting A and we're going to get Z. It's okay. I've done this long enough. No, Z's good. A's good. I'll take both. One rental at a time. My live streams 8 a.m. on Saturday.
Well, thank you both. I think we really should just take the advice of Nick. We should all sit back for 6 months to a year, wait for the crash, and then find a property.
It worked the last 2 years.
But not today.
Not today.
Thank you both. Until my next video, thanks for coming to my Dion Talk.
We're sorry, the number you have dialed is not in service at this time.